How's it going, everybody? Welcome back to the channel. My name is Jay, and today we're going to talk about how to invest our money to beat high inflation. Inflation is here with a vengeance. Even though the very latest reports showed inflation dropping slightly from 8.5% to 8.2%, this is still the worst inflation we've seen in the United States since the early 1990s. And naturally, many people only have one question on their minds. How can I invest to beat high inflation? And the best way to beat high inflation is by clicking the like button and inflating the number of likes on this video. All right, it's been a while since I've done a bad like button joke, so you just gotta give me that one. But seriously, to beat high inflation, first we have to really understand what inflation is and how it works. In the broadest of terms, inflation is the term given to your money losing its purchasing power over time. If you've ever wondered why, back in my day, your grandparents paid 10 cents for a loaf of bread and we pay $2 to $3, well, inflation is your answer. Inflation affects every product and industry, except for some reason Arizona iced tea. That stuff was 99 cents 30 years ago, and it's still 99 cents today. And it's still delicious. I don't get how they do it, but the Arizona iced tea people should probably be in charge of the Fed at this point. And contrary to popular belief, inflation isn't a bad thing so long as it's held in check. This is why the Federal Reserve keeps a goal to hold inflation around the 2% per year mark. And the reason inflation isn't always a bad thing is because inflation is what promotes the movement of money through an economy. If you know that your money loses its value over time, you're encouraged not only to spend your money, but also to invest it into things that provide a higher return on your money than it's losing to inflation. And dare I say it, this is exactly why Bitcoin doesn't make a good currency. Because Bitcoin's limited supply causes it to be deflationary, there's never a push to spend something like Bitcoin because you know the value will increase over time. But as you're all well aware by now, when inflation starts to accelerate, it becomes a bad thing. And that's when we all start to get a little desperate and start seeking out any place we can find that will protect our money against inflation. So without further ado, here are the best places you can put your money to protect it against inflation. First up is real assets. By definition, inflation is the price of goods getting more expensive. So naturally, if you own physical assets, those things are getting more expensive and inflation is benefiting you. That's why things like real estate, land, art, even some luxury watches and cars can all be good hedges against inflation. And for those of us that just don't have the capital lying around to go out and buy physical real estate whenever we want to, you can still protect your money from inflation through real estate through a number of other means. The first and most obvious is through REITs, or real estate investment trusts. REITs are a special designation of company that exclusively hold various types of commercial real estate. Think of things like office complexes, hotels, malls, and even the land that cell phone signal towers are built on. Investing in these companies directly or through a REIT index fund like ticker symbol VNQ is a good and easy way to add real estate to your investment strategy. Another way you can add real estate to your investments and protect your money against inflation is through a company like Fundrise. I've done a couple videos on Fundrise before, but essentially Fundrise is a real estate crowdfunding platform. It gives individual investors like you and me the access and opportunity to invest in private real estate deals that we otherwise wouldn't be able to invest in, or otherwise exclusively for accredited investors, which are people with loads of disposable income and a net worth over $1 million. The next place you can invest your money to protect it against high inflation is another one we talk about a lot around here. That's the stock market. The stock market typically outpaces inflation pretty easily, so don't neglect those index funds. But outside of investing in index funds like the S&P 500, if you're buying individual stocks, there are a couple things you want to be wary of in a high inflation environment. And that's in times of high inflation, your typical growth stocks, the ones that typically rely on a large use of debt to fuel their growth, will typically perform pretty poorly. That's because when we see high inflation, we generally see interest rates also rise to combat that inflation, and thus it becomes that much more expensive for those companies to acquire the debt they need to fuel their growth. That's why you'll see something like the S&P 500 index down around 20% year to date, but some big growth names like Tesla and Netflix are down much more. On the other hand, businesses that don't need to raise a lot of money to fuel their operations, and businesses that can quickly and easily raise their prices, will tend to do very well in periods of high inflation. Think of names like Pepsi or Johnson & Johnson. If you take a look at those names and compare them to the S&P 500 that's down 20%, you'll see they're performing much better. The next type of investment I wanted to talk about that can protect you against this high inflation are TIPS. TIPS are Treasury Inflation Protected Securities. Like the name states, TIPS are a form of treasury bond where the interest rate they pay adjusts along with the inflation rate to help protect your capital. But because TIPS are publicly traded, they do have the drawbacks that they can lose value just like stocks can. And if we ever get into a deflationary environment, the interest rate on those TIPS can go negative. On the other hand, I-bonds. I-bonds are not publicly traded, and I-bonds are another form of savings bond where the interest rate adjusts along with inflation. I've done multiple videos on this channel about I-bonds. I'll link to the playlist to them all down below. So rather than go on and on about it here, if you want more info, just check those out. And now let's talk a little about Bitcoin. As I mentioned earlier in this video, Bitcoin is deflationary by nature. That should make it a good hedge against inflation. However, in my opinion, that still remains to be seen. The price of Bitcoin is still extremely volatile in nature, and that volatility is far from guaranteed to work in your favor or in correlation with inflation at any given point in time. In fact, if we look at the performance of Bitcoin recently, as we're seeing high inflation, the price of Bitcoin is cratering. So maybe in the future things will stabilize and Bitcoin will be a good hedge against inflation, but right now it's still a risky asset and I wouldn't exactly consider it that. Now I'm sure there are plenty of you sitting there noticing I haven't mentioned one thing yet, and that's gold.
I love gold!
Gold is one of the oldest inflation hedges out there. And people say gold is a great inflation hedge and it just kind of gets accepted as fact. But I don't think gold is actually a good hedge against inflation. And I think that for a couple of reasons, which I will lay out in this video right over here. So be sure to check that out next. Thanks for watching this one, and I hope to see you over there.